All right, this is the industrial sector. In March 2022, we exited Fastenal to get into Raytheon. And so, what I want to do is take a look at what the um, what the benefits of doing that were before we get into comparing. And the reason why is because uh, it's going to be difficult to decide, okay, we sold Fastenal for profit, got into Raytheon, and now we're thinking of selling Raytheon for profit to get back into Fastenal. so, um, so what I want to do then is go back and look at whether or not selling out of Fastenal was a good idea in the first place. If in fact we're going to look at potentially getting back into Fastenal, right? Um, Now, I have always said, and I will continue to say, that keep um, we want to keep uh, emotions out of our financial decisions. Um, but at the same time, we have to recognize when our emotions may affect our financial decisions, right? And so I know for a fact that this particular decision is going to be affected by my emotions because my pride does not want to purchase Fastenal because I sold out of Fastenal, so I want to go back into it. But if it happens to be the better deal, then we have to make that decision. So we sold Fastenal in September of 2021. So let's quickly look at one. So go to Yahoo, get a nice comparison. Let's see how we did. All right, so pull up Fastenal. The date range here. Okay, 9/1, 2021. The current. Then we're going to compare that with Raytheon. Let's see how we did. All right, let's blow this thing up. All right, so let's see who won. All right, so Raytheon won, but only very recently. Um, yeah, we stepped back a couple months. Um, yeah, step back a couple months, then definitely Fastenal far outperformed Raytheon, and so you know we'll say that Raytheon is the winner, right? But in reality, um, overall, if we were to do the math to figure out the overall outperformance versus underperformance, I think we'll see that that Fastenal has in fact outperformed Raytheon, even though, like I said, Raytheon has outperformed Fastenal current to date. All right. So enough of that. Um, let's take a look at these companies right away. Raytheon is no longer investable for us. So I'm really glad that we're seeing this because we cannot invest in any company with a dividend less than 2%. And so we have to get out of Raytheon. We have to have a dividend of at least 2%. And so at this point, we're going to be looking at Paychex and Fastenal only. All right. All right. First things first, PE is about the same for these two companies. Um, Looks like Paychex is very close to the absolute high, meaning that if we do purchase this company, we will be purchasing it at its highs. Both are, around the same as PE is concerned, other than the fact that, like I said, Paychex is much higher, which doesn't necessarily mean that it's a bad thing. It just means that stock price has performed better, basically. Net profit much better than Fastenal. However, two completely different industries, so can't really um, make any comparisons there. Same thing with return on assets. Um, Same thing with cash. Honestly, Paychex is a service company versus Fastenal is a product company. So of course, Paychex is going to have more cash on hand. Um, but I think we can say something about the cash to debt ratio. Now, of course, again, a product company versus a service company is going to have more debt usually. But even that being the case, um, you know, Paychex seems to be just flush with cash and not a lot of debt, which is good. Short interest, there's a lot more betting against Paychex, and that may have something to do with the fact that Paychex is at the very top of its range as far as the stock performance and stock price goes. Both of these guys are pretty much at the same position as far as their absolute um, high. Same thing from their low. It looks like Paychex is a bit further off of their low than Fastenal. Again, just goes to show that obviously Paychex has performed better. All right, so Alpha, Fastenal, much better Alpha than Paychex. Up move, much better. Again, when the market is doing well, Fastenal is doing well. Down move, looks like Paychex has them beat there. Again, meaning that when there is a lot of money flowing into this particular stock, Paychex tends to move down as far as stock price, less than Fastenal. Paychex has the better beta, almost three times the beta that Fastenal has, which is really good because we do know that the market is turning over to more of a beta play. The 1 month return, again, Fastenal beats out Paychex, but that's to be expected based on what we see in the alpha, the up move, and the beta as well. Volatility, both these guys are about the same. And then their score for down move, Fastenal is a better down move company, but again, down move portfolios aren't performing very well. And then the M score, which we've talked so much about, Paychex beat them out by quite a bit. And I'll even go so far to say that Paychex is probably um, close to being near the top of the M score um, for the market. And I did say I was going to look at that um, before. So let's see if we can do that very quickly. I don't know how long it's going to take this thing to calculate. But all in all, it looks like Paychex is the clear winner here. Even with the short interest, if we're comparing Fastenal and Paychex, the short interest is about the same. And it's very possible that the short interest may have ticked up across the board for all the companies, just because, like I said, the market is um, performing poorly. And so there's a lot of people that's going to bet on the market performing poorly. So we're going to probably see short interest in a lot of these companies much higher than we have before, which is another, I think, statistic that's interesting to look at that I've never looked at before, which is um, short interest just across the board, how it's moved up and down. I think that'd be really interesting to see a graph of what that looks like because as short interest grows, typically we'll see the market move down. And then as short interest comes off, we'll see the market, I think, move up even faster. which would be really interesting to see. So I knew this was going to take a while, um, but so be it. I really do want to see um, kind of the high scores for M score across the market. And while we're at it, we might as well take a look um, at the I just said the short interest too across the market as well. All right, here we go. Let's see. Let's see. Right. Waiting, waiting, waiting. I'll tell you that currently I'm working with what is this a 1000 series graphics card. So definitely looking to upgrade to maybe 2000 series, or just basically get another 1000 and link them together to get up to 2000, so I can get this thing to calculate a bit faster. So anyway, Regions Financial, best M score of everyone across the board. And then we have Citibank, then JP Morgan, DFG, USB, HBAN, Best Buy, Paychex, which I knew was going to be there at the top, um, MFC. So yeah, I mean, listen, we know that M score is kind of where it's at. So that makes me feel really good about again, Regions Financial. Um, Makes me feel really good about moving into Paychex. And look at that, Southern Copper is there. We'll discuss them in a moment. And the MPW is up there too. ELG, Fastenal is kind of down towards the bottom. So um, again, I'm happy about that. So we'll definitely sell out of Raytheon. Um, I think the stock price has come down just a little bit over the past couple of days, but still high enough to warrant a sale. And so we'll sell out of Raytheon at a profit, and then look into moving into Paychex. The other thing that we will have to manage, and I think I'll do a video on this one too, um, just because it's something that I've talked about before, but something that we'll definitely have to, well, not really, because Raytheon is $96 basically, and Paychex is 120, so they're right about the same price. So we'll probably have about as large a position in Paychex as we do um, Raytheon.